about Metro New York here, is better prepared, has learned a lot, is better on on PEP. So you hope that there'll be a better outcome in terms of the percentages that we saw versus the last wave.
Yeah, but we remember how quickly it doesn't take much for our hospital system to be maxed out pretty quickly when it comes to COVID. So watching that, just want to draw everybody's attention to another story that caught our attention, and it talks about a tech CEO emailing all 10 million customers urging a vote for Joe Biden.
Yeah, this one caught my eye because it just does, okay, you have your personal political leanings, but do you inject them into your business and impose them to some degree on your customers? At the very least, that would suggest it's not good for business. When Michael Jordan was once asked in his career why he doesn't speak more on racial issues and political issues, he said, Republicans buy sneakers too.
But I would say that people are now doing kind of Monday morning quarterbacking with Colin Kaepernick and saying, you know what, he was right. I mean, he sacrificed everything. And I do wonder when we need to see leadership, whether it's in the corporate community, to say, okay, this isn't okay, or this politician isn't okay. And so I understand what you're saying, and I think this person is essentially, we're talking about the CEO of Expensify, but there has to be, at some point, you got to speak up, I think, also, no,
maybe.
Paul? Yeah,
yep.
maybe.
And we'll have to he made that balanced discussion.
Updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. The Dow, well off session lows. Stocks trading mixed. S&P, NASDAQ, they're both higher. It has been a volatile day. 43 minutes to go ahead of the closing bell. An exciting day. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks are choppy today, but like you said, well off session lows. Dow's currently down 45 points. S&Ps are higher by 7, while NASDAQ climbs by 13. The U.S. 10-year yield at 0.84%. Gold trading lower by 2, and transports are up 123 points. Among the main 11 S&P sectors, leaders to the upside were telecom, real estate, and industrials. Only energy and tech fell. And leaders to the upside in the Dow, UNH, Walgreens, and JP Morgan, while Intel fell 11% after its earnings and led to the downside. Also after earnings, Robert Half fell 9%, and American Express fell as much as 4.6%. In other news, Mark Meadows says he hopes for a stimulus deal in the next day or so. And wrapping things up here, Fauci says he expects a widespread vaccine several months into 2021. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill. On track for a losing week. Good to hear live. Breaking news over here, Bloomberg. Type squawk SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Pellet, thank you so much. We appreciate it. Paul Sweeney alongside Carol Massar. You're listening to Bloomberg Business Week. Well, the final debate is in the books. We're 11 days away from the election. Let's stick with the political discussion. We can do that with Jeannie Zaino, political contributor to Bloomberg News, professor of political science at Iona College. She joins us on the phone from New Rochelle, New York. Jeannie, I'm wondering here, we've often been told that the Republican Party has become the party of Trump. Were President Trump to lose this election, what happens to the Republican Party? Where does it go?
I think that we're starting to see signs as people sort of hedge their bets in terms of what they expect might happen in the next few weeks. We're starting to see signs of the divisions that were sort of part and parcel of the Republican Party, if you will, during the Obama era. I can remember distinctly when President Obama was elected in office in 2008, 2009, there was some discussion in my circles, meaning in, political science circles, that perhaps the Republican Party was dead. Of course, that turned out not be the case. But the next Republican president we got, of course, was unlike any other Republican president we had before. And it raised the question of whether a traditional, quote unquote, Republican could win that office. And so I think we're going to see a lot of that consternation going forward if indeed Joe Biden is elected. And it concerns issues regarding deficit and debt, for instance, these divisions in terms of people who, don't want this type of spending versus other people who go on the other side. It concerns foreign policy. It concerns issues like drones. I mean, you can just keep going down the litany, regulation. And so I think the Republican Party is going to be feeling its way for a while. And one of the real challenges I think they're facing in the shortish term, if you will, is that they have lost a lot of seats at the state and local level under Donald Trump. This isn't all about Trump because they were having troubles before, but you look at the losses at the state and local level. For us in New York, for instance, the Republican Party is, not a healthy party at the state and local level here. And that's true in many places in the Northeast, for instance, and in other parts of the country where they've lost seats. So they're going to have to gain their bench back. They're going to have to figure out how to win in a demographically diversified country going forward. And they're going to have to figure out who they are. They have had a lot of disagreements in the Republican Party since the fall of the Berlin Wall, which takes us back a while. But, those kinds of things.
Anybody below the age of so-and-so, I can't think, is probably Googling that, Jeannie, right now as we speak. Well,
True. So I'm so old.
Okay, I guess I just assume a younger generation is always going to be more liberal, but we know that's not the case. What is the younger generation looking for when it comes to politics and leadership? Is it AOC? Is it a younger version of DJT? Like, who is it?
Well, I think about an issue of like the environment and climate, which is so important to younger people that I deal with on a daily basis. And these are not a lot of liberal young people. They are across the board. And so I think you're right. I don't think they're necessarily looking for, AOC. There are conservative minded young people who are not, really attracted to the Democratic Party, but who have felt frustrated by the Republican Party in some way. And so those are the kinds of people you need that local bench for, to build them up so they can move their way into Congress like the Democrats finally did with AOC and the squad, if you will. But that takes some time to do, and you got to start at the school board, at the city council, the town council, those kinds of things. That's where you build those benches, and then they change the party.
We spoke with Rick Davis yesterday, who said that we could see, once we get through this election, in another 4 years, we could see Kamala Harris versus Nikki Haley. What do you think of that?
Oh, I would just love that.
Me too.
Oh, my gosh. I would love that. And I think he's absolutely right. I think that is a distinct possibility. That is the kind of thing that would be attractive to many young people and older people in terms of more diversity in both of the parties, but in the Republican Party in this case in particular. And we've seen a lot of discussion, by the way, in the Republican Party just the last few days, as sort of silly as it sounds, but about some of these rappers and other people from Ice Cube and 50 Cent and Kanye West who are saying that we are not necessarily Democrats. And so, there is diversity bubbling up there. The president last night was talking about African American men. He said it over and over again. So there is diversity sort of bubbling up there, but they've got to make a play for it, and they've got to appeal to these young people.
Jeannie, just 30 seconds. If President Trump were to lose, who's going to represent the 62 million Americans that are his core that voted for him last time?
I think they're going to have to find, it's such a good point. There are some people who talk about other members of the Trump family, potentially his children, picking up that mantle. But I really don't see anybody in the offing. I don't define Mike Pence potentially, but I don't define him in the context of Trump either. So I'm not sure we know the answer to that, and I think you may see some disaffected voters there.
I kind of want class to continue, Jeannie. I'm just going to say, I'm just going to put it out there.
Carol, yes.
Yes. You're so great. Thank you so much. Have a wonderful weekend. Bloomberg News political contributor and Iona College professor of political science, Jeannie Zaino, with us again from New Rochelle, New York. That's in Westchester. Coming up, we've got the chart of the day with Dave Wilson. You're listening to Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. Carol Massar along with Paul Sweeney. I wonder if it's going to be a food stock. I only asked Paul because, or a food chart, I should say. I'm kind of hungry.
You're kind of hungry. Well, I need to do better guessing the song. I've not had a good week. I need to finish strong today.
Yeah, you're pretty, I'm not going to say lame, but
yeah,
I'm
it was
surprised.
kind of lame. It was kind of a lame week.
All right, we'll see if you do better on this Friday. Let's check in on your top business stories. Another check on the trading day. Hey, Charlie Pell,
Well,
can you
hello there.
believe I said lame? That is so harsh. I'm so sorry, Paul.
Moving right along. we've got 28 minutes to go ahead of the closing bell here, looking at a mixed picture for the U.S. equity market. Quite a recovery for the Dow. Red on the Bloomberg, though, nonetheless, at least for the Dow, down 59 points, have been down more than 200. Most stocks higher after the Trump administration resuscitated hopes for a spending package. S&P up 5, little changed, up by about 0.1%. NASDAQ up another 5, up by less than 0.1%. S&P, by the way, on track for a losing week. Right now, we've got the 10-year up 6/32, 10-year yield 0.83%. Gold down $1.47 the ounce. Spot gold, little change, down by about 0.1%, 19.02. West Texas Intermediate crude down 2.1%, 39.80 for a barrel of West Texas Intermediate crude. AstraZeneca shares trading little changed here in the U.S. Talking about the ADRs, the source tells Bloomberg AstraZeneca, that's the UK drug maker that is developing a coronavirus vaccine with the University of Oxford, has been cleared by U.S. regulators to restart a trial halted in the country for more than a month on concerns about a volunteer who became ill. Again, shares of AstraZeneca, the ADR, is down now by just about 0.1%. The focus, though, very much on the race to develop a vaccine. Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health. He was interviewed this morning on Bloomberg Television.
We know that most of the candidates coming through can induce a rather good immune response in most of the participants. That's based on smaller studies, phase 1 and phase 2 clinical trials. What we don't know is how that's going to protect us from the COVID-19 as a disease. Is it going to stop people from getting infected? 100%. Is it going to stop people from being infected by 50%, but reduce disease severity by a larger percent? And those particular factors are going to really dictate how effectively this vaccine can be used.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Boston Beer shares surging after earnings. This morning, management did boost its outlook for shipment growth. Boston Beer, ticker SAM, is advancing today. Shares up by just about 15%, actually up by 18.1% right now on Boston Beer. On Wednesday, Wells Fargo told high-earning employees it would stop matching contributions to their 401k plans. Today, the bank reversed course. The about-face follows a swift backlash from affected employees. Recapping, stocks higher, S&P up 5, a gain of 0.2%. I'm Charlie Pellet. Bring on the song of the day. That's a Bloomberg Business Flash.
Yes, indeed. I hope it's a good one and an easy one for Paul Sweeney. Just going to say. All right, you're listening to Bloomberg.
He comes crawling across the dry fields like a dark shroud. Rainmaker, little thing for hire. Rainmaker.
We're just going to let it play.
Just let it play.
So it's kind
Private New Jersey.
It's kind of a gift, David Wilson. Thank you so much. I think we all needed this on Friday. A little bit of Bruce.
Absolutely.
But first, I want your review of Letter to You and his new music.
Well, I mean, what really jumps out about it is just the way the sound hits you. I mean, this was Bruce and the E Street Band in a studio at his home in New Jersey for 4 days, all recording live. That's what you hear. I mean, and it's such a sound. You haven't heard anything like it, arguably, since the 70s and Darkness on the Edge of Town.
Which is my favorite album, Bruce album.
Well, there you go.
Well,
All right,
do you like the new sound, Paul?
I've only heard a couple songs. I'm literally what I'm doing. You can see my phone.
Yeah.
I'm downloading it right now.
Okay. Yeah, really
So,
cool
I mean,
stuff.
I needed Dave Wilson's review before I did, though.
Yeah. I kind of love that they did that, although I imagine that
Yeah.
studio after 4 days was a place nobody wanted to be. Just going to say.
Well, they were there for a fifth day to actually listen to what they had recorded. So yeah.
Good stuff.
Cool.
All right, so they stuck around. All right, so I like your chart of the day. I've kind of peeked at it. It's one that I think is going to make a lot of sense, or at least be very clear for our listeners. Why don't you get into it, Dave?
Well, it's definitely gotten people's attention. You
Yeah.
know, the way that individual investors have been thinking about stocks the last few months, maybe they were looking for a rainmaker to get things back to what passes for normal. But, of course, over that 7-month period, you know, really since the lows in March, you have seen a heck of a recovery for stocks. You have not seen a recovery in the views of individual investors. I mean, we're talking about our weekly survey results as compiled by the American Association of Individual Investors. And what they've shown is that consistently there have been fewer bulls on stocks looking out 6 months than bears. And this week, that finally changed. 7 months into a rebound, you know, where we've seen the S&P 500 set records. You're finally getting people to turn more positive than not. I mean, it just jumped out of the results, and you know, it just goes to show you.
Is this
how
late to
hard
the
it is.
party? I mean, is this a sign that folks are a little late? Is it time to sell?
Argue that. I mean, I had a chart out a while back comparing what this survey was showing with another one that tracks institutional investors.
Okay.
You know, the National Association of Active Investment Managers puts it out. And, you know, it's been positive right along in the sense that, you know, these investors have really kind of focused on owning stocks and, you know, in some numbers. And that's what the survey's shown. You know, sentiment among smaller investors has been a harder nut to crack, clearly. And now, you know, it looks like it's finally coming around. And we'll see what that means going forward. Certainly, you know, some of the response to putting out this chart on Twitter like I did earlier, you've definitely seen some skepticism show up. In any case, if you haven't seen the chart yet, send me an email. I'll get it to you along with the explanation that goes with it and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
Our very own Lisa Abramowitz tweeted it out earlier today. So if you made Lisa Abramowitz, that's a high bar. She only takes the best stuff.
And she's got like 1 million Twitter followers.
Yes.
6 figures.
I know.
She's a star.
I'm always pleased when Lisa showcases my work. Put it that way.
Do you get a lot of feedback?
I get a lot of response, that's for sure.
It's mostly bond geeks, though. So it's good to get some equity stuff out there.
It is a certain breed for Lisa.
Characterize the audience. I'm just glad people
Yep.
see it.
And don't listen, we love bond geeks. We love all kinds of geeks here at Bloomberg.
Yes, we do.
All right, Dave Wilson, thank you so much. Check out Dave Wilson's chart of the day. You can find him at the One Dave on Twitter. All right, let's get back to world and national news. For that, back to Nancy Lyons in D.C. Hi, Nance.
Hey, Carol. President Trump is in Florida hoping to draw more voters to his campaign in the battleground state. He says his supporters are enthusiastic and will carry him to victory on November 3rd.
It's going to be a great red wave like you've never seen before. You're going to have a wave like you've never seen before. It's going to be all red, and it's going to be a thing of beauty.
Trump and his campaign have cited increased Republican voter registrations as a sign he still has a viable path to re-election. Well, the U.S. Senate has begun the process of confirming Judge Amy Coney Barrett as an Associate Justice of the U.S. Supreme Court, with Democrats united in protest. Bloomberg's Irv Chapman has more from Washington.
Democratic leader Chuck Schumer sought to delay the confirmation.
The Senate majority is on the precipice of making a colossal and historic mistake. We need to restore public trust in our institutions, not continue to undermine it.
Schumer's delaying tactics stalled the debate for 2 hours, including his demand for a closed session, which lasted barely 20 minutes, after which Majority Leader Mitch McConnell took the floor.
Rarely have we ever had a nominee as extraordinary as the one we have before us right now.
It will be a Sunday session, and McConnell scheduled a final vote on Monday. In Washington, Irv Chapman, Bloomberg Radio.
Researchers say if everyone in the country wore a mask, we could save close to 130,000 lives by the end of February. That's the assessment from some of the top COVID-19 trackers at the University of Washington. They looked at the spread from the first case up until late September. They say without universal masking, more than 500,000 lives could be lost. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. Paul Sweeney, Carol Masser here on Bloomberg Radio. So I got a couple of Wells Fargo stories that are trending high, although, I know the one trending high on the Bloomberg is about talking about the sale of its asset management arm. But this whole idea, this U-turn that it did so quickly when it was looking to cut some perks for its high-earning workers, including matching their contributions to their 401ks. And then I guess they did that on Wednesday, and then by today they were like, okay, we're not going to do that. I can only imagine the uproar.
Exactly right. I mean, these are for employees who earn more than $250,000 a year. But I have, 3 of my children entering the workforce, and the one piece of advice I give them is, put as much into your 401k as you can afford. Ideally, whatever your employer is matching, that's the number. You really want to get people into the savings mode, retirement mode, and really planning for the future. So for an employer to do this, now, understandably, the banks are under pressure.
Right.
They need to cut costs. They weren't doing it for the rank and file. These are only for more senior executives. But still, it's just kind of an odd signal to send, again, in a country where, again, we're trying to incent people, where there's no more, you don't have pension plans, defined pension plans that our parents had and things like that. You got to take care of yourself.
Well,
and one of the ways you do it is 401k.
It's interesting, though, Paul. They said that this measure was part of a larger set of changes that they were doing to put, quote, greater emphasis on how we support our lower-paid employees through our compensation and benefits program. So did that mean that they were going to pay lower-income workers at their firm more? Is that what they
don't know. I kind of, as I read it, it just says, okay, we have to cut costs. One of the ways we're going to cut costs is with our 401k match. Should it go across the board, or should we still try to support our lower paid people at the expense of our higher paid people? You see that sometimes at bonus time. Hey, guys, take one for the team. We got to take care of our junior people. But this was just an odd message, and I'm sure the feedback was pretty swift.
Yeah, absolutely. There's another story in Wells Fargo. Check out Bloomberg.com if you want to read that one, because this one is the one that's definitely catching our attention. You're listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. Most stocks higher after the Trump administration resuscitated hopes for a spending package. S&P advancing to pair a weekly decline, still on track for a decline of about 0.6%. The S&P erased losses after White House Chief of Staff Mark Meadows said he expects a deal in a day or so. S&P up now by 10, up by about 0.3%. The Dow remains lower, down by 36 points, down now by 0.1%. At the worst level of the day, the Dow had been down 213, lower by 0.7%. NASDAQ up 30. For NASDAQ, that is a gain of about 0.3%. 10-year yield now 0.83%, up 5/30 seconds. Gold, little change, lower by $2 the ounce at $19.02. And West Texas Intermediate crude down 2.3%, $39.71 a barrel. Recapping, equities trading mixed. S&P, though, higher, up 10 points. That's a gain of 0.3%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close
That funky music will drive us till the dawn.
on Bloomberg Radio.
Taking a look at these markets here, there's it's a big issue. We've had a tremendous rally off the bottom when the pandemic first hit, and it's kind of a market rally that a lot of people just don't believe in when you put it against the backdrop of the economic data that we're seeing, and you hang your hat on some vaccine that is out there. So we all have to become scientists here.
Right.
And it's just, when you think about it, the performance of this market is just extraordinary. Somebody who's seen a couple of cycles or two in the markets is Bob Dahl, Chief Equity Strategist and Senior Portfolio Manager for Nuveen. He joins us on the phone from Princeton, New Jersey. Bob, thanks so much for joining us here. Do you believe this market here, or are you someone that says, this is just a Fed Reserve market, and I really don't trust it as far as I can throw it?
Well, certainly the Fed has given us a lot of firepower, and they remain at the ready, if you will, should they be needed in any significant way going forward. But I think, as you also hinted, the market has kind of stalled out. This is the first time since the March 23 bottom that we can go back and say the stock market's the same place it was 2 months ago. So a lot of cross currents in the market is, I think, I'm using the word churning, frustrating sidewise. It's up one day, down the next, and not a whole lot of trend. We have to digest all that great gain we saw from that March 23 low.
Yeah, it's pretty wild. Do you think the election is a big, catalyst for the markets potentially moving here, Bob?
Well, the elections always matter, and markets hate uncertainty, and that is an uncertainty on a long list of uncertainties at the moment. I think what the market is saying with all these uncertainties is I'm going to be shorter term in focus. And that means, okay, if it's a Democratic sweep, as the polls are suggesting, I, Mr. Market, can live with that because we'll get a bigger stimulus package. Isn't that good news? That allows the market to move higher because the economy and earnings are doing better. But if that's the myopia that the market's facing, somewhere down the line, I don't know, March, April, May, when it happens, the market's going to wake up and say, well, wait a minute. With this package also comes higher taxes and some more regulation. I'm not sure I like that so much. So I think we have some toing and froing in front of us as it relates to the election.
That's a technical term, right?
That's
Toing
a CFA.
and froing.
Absolutely.
CFA level 3 term there. So, Bob, what we've noticed is, a couple of camps out there kind of duking it out on the equity markets. One says, hey, I'm sticking with these big cap, large cap tech names that have show really strong top line growth. And then there's the other folks out there saying, I'm going to look to the other side of this whole thing. When I do, I see an economy that's going to start growing again. So therefore, I want to rotate into some cyclical names, maybe some small cap names. Do you have a vote there on, or how do you think about it?
sure do. I think it's not an either or, it is a both and, but I lean toward have more cyclicals in your portfolio. During these 2 months where the broad-based stock market's gone nowhere, we've seen the dollar fall, we've seen treasury rates move up some, the curve steepen a bit, higher commodity prices, small cap stocks have done well. Today's another example of that. Emerging markets have done a little better, and economic sensitive sectors, the cyclicals you just referred to. So the market is saying, and I think there are a lot of fundamentals to suggest, that the largesse of policymakers, monetary and fiscal, all around the world, are going to provide us with some grist for the mill, if you will, that the economy is going to be okay. Now, that's dependent on COVID behaving itself at some point and eventually a vaccine.
So what's the biggest risk right now to the markets, Bob? And you know, as Paul said, you know, you've seen a lot of different cycles. You've seen, you know, the markets when it looked really bleak, whether it was after the financial crisis and other times. But what's our biggest risk right now as investors?
I think the biggest risk is what we can't control, and that is coronavirus. Look, we are learning to live with it, having shut the economy down when we didn't know how to spell it a few months back. But now we're at a position where we're learning to live with it. But if it rears its ugly head too many places and too fast, things will slow down. People will go hide under the covers again, and that's not good for economic growth. That's the uncontrollable. There are a lot of other things, too.
Yeah.
You know, we're going to get another fiscal package. How long will the Fed be there? Valuations are up a bit. And we mentioned the election uncertainties, not to mention non-U.S. political issues, China, Brexit, and the like. So there's plenty for the market to focus on.
Bob, what do you look at outside the U.S. market-wise? Anything that's getting your attention these days?
So believing that the U.S. no longer has the interest rate advantage versus the rest of the world as we did for the last few years, and maybe not the growth advantage versus the rest of the world, we're going to get at some point a transition from the U.S. being the leader, seems like forever, to some non-U.S. markets doing better. For that to happen in a sustained basis, I do think we need a vaccine, and that will enable global growth to do better. And look, the longer to your time horizon, the more the emerging markets make sense. If the globe's going to grow long term, the emerging market consumer is going to play a big role in that, and we'll get to that, back to that sort of thinking.
Yeah, and I'm just looking at the names like in your fund. I mean, it really is those household names. Is there anything in particular, maybe coming off of earnings right now, that you think maybe surprised you and thought, okay, maybe this is a smarter investment than maybe I was thinking about?
Yeah, so I'd start by saying one of the things that bugs me is earnings are coming in less bad, i.e. better than expected.
Right.
And too many stocks are reporting a decent number and the stock's going down. Another sign the market's tired and just needs a break. So I still want stocks with good earnings and good cash flow, don't get me wrong. Home builders, you know, that's the beneficiaries of COVID. Home builders, parts of technology, parts of healthcare, online shopping. These trends are not over because COVID's not over.
Yeah, it's pretty fascinating. Home builders, normally in an economic malaise, you'd see them down, but because everybody moving out of the cities and tapping into the housing market, you've really seen that group take off.
Correct. Coupled with the very low interest rates, it's
exactly.
It's a natural place, and those companies are doing well.
All right, Bob Dahl, you stay safe. Thank you so much. Bob Dahl, Chief Equity Strategist, Senior Portfolio Manager at Nuveen, on the phone from Princeton, New Jersey. Those home builders, Paul, are up about 29% so far this year.
Yeah, it's been a combination, as Bob was suggesting, low interest rates, record low interest rates, and then this pandemic-induced, I guess, exodus from the cities. Got to go buy a house. I can tell you, in the town I live in here, New Jersey, it is hot as a pistol. It's really as hot as it's been since before the financial crisis.
Time to sell. I'm just going to say, if you own a home. All right, stick around. Just a few minutes away from the closing bell right here on Bloomberg Radio. Bloomberg.com/IMS.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. There you have it. Sound of the closing bell at the New York Stock Exchange as we wrap up trading on this Friday, October 23rd, and it is on to the weekend. Folks from Sterling Capital, by the way, virtually ringing that closing bell. Most stocks rose after the Trump administration resuscitated hopes for a spending package. Treasuries remained higher. The 10-year yield 0.83% on this Friday. The S&P up 12, closing at 34.65. That was a gain of 0.35%. Today, the Dow tumbled 27 points, lower by 0.1%. At the worst level, the Dow had been down 213, a drop there of 0.7%. NASDAQ up 42 for the NASDAQ Composite Index. That was a gain of just about 0.4%. On the week, S&P had a weekly loss of about 0.55%. Bob Dahl is Chief Equity Strategist at Nuveen. He was our guest moments ago right here on Bloomberg Business Week.
So the market is saying, and I think there are a lot of fundamentals to suggest, that the largesse of policymakers, monetary and fiscal, all around the world, are going to provide us with some grist for the mill, if you will, that the economy is going to be okay. Now, that's dependent on COVID behaving itself at some point and eventually a vaccine.
Intel after earnings dropped 10.6% today. Intel slumped after a surprise drop in data center sales and a tepid forecast added to concern that the company is losing its lead in computer chips. American Express's cost-cutting program fell short in the third quarter. American Express shares today down by 3.6%. Mattel rallied after third quarter results shattered expectations. Mattel up today by 9.6%. Rival Hasbro up by 2.4%. So again, recapping, turned out to be a mixed day. The Dow lower, S&P, NASDAQ both higher. Gold, a little change, down 72 cents the ounce at $19.03 West Texas. Intermediate crude down 2.2%. Recapping, S&P up 12, gain of 0.4%. Charlie Pellet, Bloomberg Radio.
Wild thing, think you move me.
I got a few moves I know you'll like.
Shaking all over.
Bloomberg Business Week. Movers and shakers.
Shaking, not stirring.
On Bloomberg Radio.
Gotta find my button to push it. You're listening to Bloomberg Business. Man, it is so Friday. Do I need it?
Yes.
Carol Master along with Paul Sweeney. And we do want to take a look at some of the stocks on the move, kind of wrapping up that trading week. Charlie Pellet, of course, giving us those closing numbers for the Friday equity trade. Big picture, S&P 500, definitely more of a risk-on trade today. 346 names in the S&P 500 higher today, 157 lower, 2 unchanged. And Paul, if I look at the major industry groups in the S&P 500, 9 out of 11 are higher. Top of the pack, communication services up about 1%. Consumer discretionary were up 0.9%. Real estate was up 0.7%. Bottom of the pack, the 2 decliners for the day, information technology just down a hair, down about 0.1%. Energy, which we know has just continued to take a beating, and then it rallies, and then it takes a beating. It's down about 0.5% in today's session. But I think overall, as Charlie mentioned, we're down for the, let me do the 5-day chart here. And it looks like I think we're down for the week, but forgive me. I'll pull up those numbers. Anyway, what have you been looking at?
Well, I was just looking, it's interesting. I think that push-pull in the marketplace, the trade is still with the big tech names, the big top-line growth stories. I just don't think people are comfortable given the pandemic outlook, at looking to the other side of the pandemic and thinking about a cyclical trade, thinking about a rotation. We see it maybe for a day here, a day there, but it just doesn't seem to have any legs. And people come back to the tried and true top-line growth stories, whether it's an Apple, Amazon, or anything, Tesla, of course. Just coming back to those names, we see them in a lot of the big portfolios.
Well, speaking of that, I'm looking at the weekly numbers for the S&P, the Dow, and the NASDAQ. The S&P is up about 0.5% this week. Dow's up about 0.4%. And it's the NASDAQ that led the way. Mm-hmm. It's up almost 1 full percentage point. You mentioned Tesla, and I wanted to bring that up again because it certainly was in the news this week. We had earnings, and the stock shot up on those earnings news. Stock was actually a little bit lower today, down about 1.2%. But again, this is a stock that's up 402% this year.
Yeah, it's just extraordinary. They had a little bit of a I guess a recall
They did in
about
China.
30,000 vehicles. Maybe that was a little bit of a weakness on the stock today. But the company had a very successful earnings from a profit perspective. But I think that one of the numbers that people were looking at were the demand forecasted for the year. So they stuck with their forecast, and that's really important. That was the metric that they were looking at, I think, investors, as opposed to the near-term profitability. But we've had some consistent profitability coming out of the company. They're now free cash flow positive, which was another big concern for people.
Hey, our number one worst performing stock in the S&P 500, care to guess?
Intel.
Yeah, Intel. Down almost 11% in today's session.
Yeah, and we had Anand Srinivasan from Bloomberg Intelligence on yesterday, and I think he made a good analysis here in saying about, boy, it just seems like Intel, they still have the market share. They're still huge, but you just feel like on the margin, they're losing some of the technological battles, and you're starting to see that creep into their business. And I think a lot of investors are just saying, is this kind of a tipping point for the competitive landscape of the microchip business, semiconductor chip business?
Yeah, exactly. I mean, listen, we see these industries, we see these kind of established players who have dominated the space for decades, and then all of a sudden, things start to change. And so that's a really fascinating story to watch. We've also had a lot of stocks on the move and certainly showing up in terms of the biggest movers or in the S&P 500. And among them, SVB Financial Group. That stock was your number one gainer in the S&P 500, up about 4% in today's session. Had to do with earnings, so the stock was up the most in 21 weeks. And so the company did come out, third quarter EPS 847 versus 515 year over year. So that was a tremendous beat, and so shot it to the top in terms of movers here.
Yeah, a couple of things there. One is, we had some steepening of the yield curve, which helped the financials this week. The second thing was, these companies and their earnings analysts and the consensus estimates, we've seen some really big misses and really big beats, and I think that's a kind of a function of neither the analyst community nor the the C-suite executives themselves have a really good handle on forecasting, even a quarter ahead, because it's a strange environment. You don't know where the demand is. You're not quite sure where your costs are going to come in because you're operating in a scenario where you've never operated in, and a lot of these folks are having a hard time forecasting their business, or they're just pulling the forecast.
Hey, and I do want to mention Whirlpool. That stock was up about 2.2% in today's session. They reported earnings this week, and we did see them, I think, see some selling on that news just slightly after rallying on the day after that they reported. We're going to check in with the company's CEO in just a few minutes. In the meantime, you are listening to Bloomberg Business Week, and this is Bloomberg.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for a price on Wilson.
Open up the door, it's Dave. Who? Dave.
Hey, Mr. Wilson!
All right, Mr. Wilson, Bloomberg Stocks editor Dave Wilson here. What do you have for us?
Cleveland Cliffs, Paul.
Steel.
Yeah, well, that's the thing. Historically, this company was a maker of iron ore for steel production. Now it's turning itself into a steel maker. The company acquired AK Steel in March and agreed to buy ArcelorMittal's U.S. steel business last month. Cleveland Cliffs has been around a long time, traces its history back to 1847. The ticker is CLF. Now, the shares surged twice in the past 20 years or so, but neither rally held. This year, Cleveland Cliffs fell as much as 69% through mid-March, around the time the AK Steel deal was done. The shares finished recouping the loss today thanks to well-received third-quarter results. Cleveland Cliffs had a narrower loss for the quarter than analysts expected in a Bloomberg survey. Revenue almost tripled thanks to the purchase of AK Steel and also beat estimates. Cleveland Cliffs said shipments were back to normal last month, and the momentum has continued this month. Just what investors wanted to hear. The shares rose as much as 9.3%, reached their highest price since August of last year. They closed with a gain of 4.8%.
Yeah, interesting name. I have to say that's a name that often used to, I used to have a guest that used to come on and talk about it. And you'd often see it show up on the kind of biggest movers lists. So an interesting one to dig into. Dave Wilson, thank you so much. Have a great weekend. Dave Wilson with his stock of the day. And this is Bloomberg. Well, as we mentioned earlier, Whirlpool reported earnings after the close on Wednesday. The stock initially rallying, then ending a little bit lower on Thursday, but the stock is up, as I just mentioned, in today's session. A great company to talk to, especially amid the pandemic. Joining us right now is Whirlpool Chairman and CEO Mark Bitzer. He's on the phone in Benton Harbor, Michigan. Mark, delighted to have you here with Paul and myself. Welcome.
Well, thanks for having me on the show, Carol and Paul.
Mark, talk to us a little bit about, first of all, I want to take a little bit of a step back and a look back. Tell us what your world has been like as a leader of a major company going back to March, and then we can kind of contrast it with where we are today. What was it like back in March?
Carol, that's an interesting question because it feels like light years away.
Fair, I agree.
Distant memory. So, I think we're a little bit in a different position than most other domestic companies because we have a pretty big China operation, which actually happened to be 150 miles away from Wuhan, and we have our European headquarters in northern Italy. So you remember, when you first had the China message, initially it felt like China contained, and we were worried about manufacturing supply for China. But then the really decisive element was when our president of a European business called me over a weekend and said, oops, there are a couple of cases in Lombardy. And that's kind of when you realize, oops, this is big. So, again, that feels like a really distant memory, but I think that's when everything for us changed. And we are kind of, by mid-March, you realize everything which we thought about 2020 will just be upside down. And we don't know how deep a canyon is into which we're looking. So that was a pretty dramatic impact. And then you kind of keep also in mind this, unfortunately, with COVID didn't come with an instruction for use for management. So,
right. No playbook, right?
So
nobody had the playbook on this.
Somewhat annoying. And then you get all these emails from consultants to tell you how to manage a crisis. The problem is they're all right, but they're always 6 weeks late. So it was an interesting experience because you basically got to improvise, you got to pull the troops together. And of course, the first focus was entirely about, how do we secure health and safety? Because, we always talk about the economic dimension of this crisis, but there's a big human dimension, and we're all humans with our fears.
Right.
And you got to manage a big organization with people who have also fears. And so managing the health and safety of our people, that obviously was the first one. But then, of course, you talk about all the business implications, and at least as a CEO, I was, quote unquote, in the lucky situation that even in 2008, 2009, I was here in the US, and I wasn't running the company, but I call it a front seat to what we experienced back then. So you take some lessons from back then, and of course, first focus was how do we secure liquidity because we don't know how bad this is going to be, and then you start taking all the decisions. So it was pretty much a rolling up the sleeves event back then in March and April.
Yeah.
So, Mark, give us a sense of kind of where you are now. How has your business changed? What are the big issues you're focusing on right now?
Paul, I mean, it's first of all, I heard you earlier talking about visibility. Back then in April or March, and we had visibility for a week. I know it sounds silly, but you had a visibility for a week, and you just don't know what happened. Then as Q2 evolved, you had a visibility for maybe a couple of weeks or months. By now we see 3 months, maybe 4 months, which is unusual, but at least you see a little bit longer. So you see a little bit more for perspective. The way I look at it right now from our business and our industry is kind of, and zooming out a little bit, as you all know, there was a lot of talk initially about is this going to be a U-shape recovery, or V-shape, or W-shape, or whatever shape. Yep. And by now, I think most people realize that's increasingly an irrelevant discussion because what matters is in which cycle is your industry. Because every industry goes for a different cycle. And, initially it felt like our industry is the Corona loser. But now, I think it now immediately becomes more and more apparent we're a long-term, maybe a Corona winner. And what I mean with that is, it's a simple fact, our business is in the home. It's about improving life at home. It's about washers, dishwashers, and ovens. People are spending time at home. And what we see now increasingly, that's where we're now more, and I'm leaving the human side of it away, which is still a big issue. But from business side, we're more and more in the opportunity side of this Corona cycle. And that's good news because people are spending time at home. We're investing in the nest, as we call it.
Yeah.
And just think about yourself. Do you know a single friend or a neighbor who didn't paint some room in the house or didn't buy something new? everybody's improving the house. And it's more than just kind of a short-term improvement. People are rethinking the purpose of the home, and that plays in our favor.
Yeah. When did you realize that that was starting to happen? Because, it was really fascinating, I think, and I don't know if, Paul, you concur with this, but like as journalists, because I think initially everybody was afraid to talk about the pandemic and the impact and not having visibility. And then all of a sudden we started to see different companies, of course, nobody wished the health crisis on anybody, but whether it was Netflix or some others, that were benefiting because of the crisis. And all of a sudden you started to see the numbers and you're like, oh yeah, I thought everybody was going to lose in this crisis, and that wasn't the case. When did you guys start to see that in your numbers?
Yeah, I mean, Carol, it's tough to pinpoint exactly when we saw it, but I think it became apparent pretty much around the summer period. Well, first of all, I got to step back a little bit. And we're certainly not the health experts, and we're probably already enough self-declared health experts around here.
We have them here too.
Yeah, but it became pretty apparent in April, May that despite all the talk, we have to learn to live with this crisis and the coronavirus, and it's not going to go away short term. And that's when we also realized that will change the consumer behavior. And the way we look at it right now, it's hopefully this corona crisis at one point will be behind us. I don't think the consumer behavior will go back all normal, because think about it. Most consumers, or not most, but many consumers will, by the time this is over, probably have spent more or less a year at home.
Yeah.
You don't erase a year of consumer behavior from a memory. It's not a flash memory. That will stay. People will invest in the home, and it just becomes every month more apparent. And we see also in our own business, the initial demand was a lot what we call crisis appliances, the freezer, the microwaves, or duress products which just, broke down because they have been used so intensively. But we now see more and more people spending money, and it goes more and more into big-ticket items.
Like what?
You talk now about the higher-end fridges, or you talk about the higher-end ovens. People are really investing. It's not just with duress and the crisis. They're investing and they're upgrading. Because they all see, okay, I got to spend a lot more time at home going forward. I don't think certain behaviors like, we have statistics, 55% of the people even now say they spend significantly more time in the kitchen and cooking than ever before.
Oh, yeah.
That will not go back to zero. It will not. Yeah. And I think that, again, plays in our favor.
Hey, Mark, you initially mentioned something about the supply chain and the shock there. Give us a sense of how your supply chain is looking now.
In short, Paul, we're still supply chain constrained.
Okay.
Now, let me expand a little bit more on this one. We, early in this crisis, remember around the springtime, and when people were speculating, well, is it over by Easter? And a lot of industrial companies shut down the factories. We did not shut down the factories. Which was a little bit bold decision, but I'm glad we did. Which, on the other hand, was very demanding on our people, because we asked them to come to work where a lot of people were extremely uncertain and nervous.
Yeah.
Having said that, it gave us a lot of lead time to learn how we can reasonably safe produce and have an environment in the factories which kind of maximizes the health and safety of our people. Because in a big industrial factory, and keep in mind, if you would go to one of our factories, some of them are a mile long. These are not kind of small buildings. They're massive, big factories where steel comes in and a washer comes out on the other side. So you're trying to get that in a safe environment. And these are industrial complexes with 2,000 or 3,000 employees in one factory. So you have line distancing, mask wearing, sanitization, temperature check. It's a massive effort, and the fact that we started that early allowed us at least to get much faster in producing reasonably safe. Now, having said that, today, fast forward, the fact is, if you try to keep a factory safe, you will not get it to the same yield as pre-COVID, because you have to reduce the paces of the speed on a line, because you have to have a social distancing. You will have disruptions with components. You have challenges with logistics. So no matter how hard you work, you will not get it to exactly the same output as pre-COVID. And that's why our supply chain today is constrained. I mean, we're not fully able to keep up with demand, which I know from financial perspective would say that's a good problem to have. True. But of course, on the other hand, we're frustrated of letting consumers down and having wait 6 weeks for a product.
So, Mark, since you anticipate that, as you said, you can't erase a year of consumer behavior from memory, and I agree with you. I think I'm rethinking my expenditures going forward, even when things get back to normal. It's very easy, especially in a city like New York, you can just money just kind of falls out of your pockets, but you can kind of rethink your focus. If you think that consumers will continue to focus on their homes and spend, what kind of capital expenditures do you need to potentially do to meet that expected greater demand? Or can you do it under existing facilities?
Let's put it this way. Under normal circumstances, we could do it within our existing network. But again, as long as COVID is around us, and you give me whatever end date you think it is, but as long as it's around us, it will be somewhat constrained, and you will have on and offs, and you will have a supplier who has some challenges because they had to shut down the factory, whatever else. So as long as that's around us, we're constrained. Having said that, Carol, because we are increasingly confident about the long-term prospect of what it all means for home and house, anything home and house related, we are starting to actually dial up our capital investments also in capacity in North America.
Oh, you are? So does that mean, okay, wait. Paul and I just perked up because he just actually eyed me, said, are they moving manufacturing back to the U.S.? Are you?
Well, we never left.
Well, that's true. That's true. Okay, fair enough.
Carol, that's, when I sometimes hear people,
I apologize. Yeah, that's right.
No, I'm not accusing you. I mean, it's funny because 82% of what we sell in the U.S. is produced in the U.S.
Yeah.
We're one of a few companies. So when I hear people, well, we bring jobs back, well, we never left.
Shame on me.
Yeah. We right now we're hiring because we're running some factories 3 shifts, so we're hiring on the factories. Now the real point is, and maybe we're an early indicator, but we were reluctant so far to add capital on capacity or for capacity. I think we're now increasingly getting closer to we will invest to expand capacity in North America and U.S. Obviously. So
soon?
Kind of now
soon? Will it happen soon?
Well, and we're obviously right now we're planning for 21, but
okay.
It's not one big decision. There's like 10 small decisions. A couple ones we already took because again, some demand elements I don't think will go away, and you also have a broader context, Carol. Is the U.S. housing? We were already bullish about U.S. housing pre-COVID. Now, because the demographic trends, there's a pent-up household formation.
Right.
The housing market has been undersupplied for decades. And on top of that, the other side is there is disposable income. As you mentioned, people are not spending money on restaurants, and I feel sorry for restaurants, but they're not spending money on outdoor dining or indoor dining. We're not going on travel. There's money available, and on top of that, low financing. So the housing will be, in our view, very robust for a couple of years.
Hey, Mark, talk to us about your balance sheet here. We saw a lot of companies early on in the pandemic really rush to the market to shore up their balance sheet. How's yours looking right now?
Actually, right now it's in very good shape. Now, let me expand on this one, Paul. It's also funny because you asked earlier about the outset of this crisis, which by now we've all forgotten. People were referring to, well, COVID is a black swan event, we couldn't prepare for it. True. Having said that, the possibility of a downturn or blip or recession was there already at the beginning of the year. I mean, people knew at one point there will be a correction. So we started bringing our balance sheet in shape over the last 1 or 2 years. We did that already. So we entered the crisis already in a pretty good fashion. And then what we did on top of that, immediately when we saw this happening, because we saw what happened on commercial paper market in 2008, we immediately went out for some short-term borrowing to have a buffer for whatever happens. Now, fast forward, we have right now, because business is going very well, we have a very strong cash flow. We have $3.5 billion cash on our balance sheet as of September, so we're now paying down the short-term debt which we took on just as an insurance. So by year-end we will be out of this short-term COVID debt, and we will be in a very strong balance sheet position, and that's a good position to be in.
Yeah, totally. Hey, just saved about 40 seconds here, Mark. What's the cool next thing in appliances? And I fortunately have to ask you to be quick.
Carol, I need more than 40 seconds.
So then you'll have to
do advertising.
You will have to come back. You will have to come back.
No, there's a whole new dishwasher line which we just launched. There's a new top loader coming out, And of course, it's Christmas. Buy both KitchenAid stand mixers.
All right. I just want to know if there's a dishwasher that actually teaches my 17-year-old how to actually load it and get the dishes out of the
we
sink.
may hire you as an engineer if you solve that way.
I'm the daughter of an engineer. That might just work. Mark, what a treat. And I do hope you'll come back. Good luck. And it was just great to check in with you. Mark Bitzer, Chief Executive Officer of Whirlpool, on the phone from Benton Harbor, Michigan. I told you earlier we tried to get a stove at a beach house, and we couldn't get it over the summer. They're like, there are no appliances available.
That's just amazing. But that's the supply chain. That's exactly
it. Yeah, totally. All right, for those of you listening in New York and San Francisco, watching on YouTube, Bloomberg Business Week, we're going to continue. If you're listening on Bloomberg 99.1 in DC, Sound On with Kevin Cirilli is coming up next. Coming up next, though, we've got another cool story in the magazine. This is maybe the president's fallback plan, so we'll get into that. And up next, John Mackey at Whole Foods. This is Bloomberg.
Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
I'm at that point in the day, Paul Sweeney, where I just kind of need to run around the studio like a couple times just to kind of get myself going again.
That's right. It's a Friday, late Friday. That's kind of the feeling.
Yeah, coming up, that's so true. Coming up, we're going to hear a little bit of the next peer-to-peer conversations, David Rubenstein show. So stick around. He's got an interesting guest. We'll hear a little bit in just a moment. Right now, back to Charlie Pellet.
All right, I thank you very much. And here's what's going on. We've got the Dow lower. S&P, NASDAQ, both higher. Most stocks advanced today after the Trump administration resuscitated hopes for a spending package. But a developing story that I want to pass along from AstraZeneca, that's the UK drug maker developing a COVID-19 vaccine with the University of Oxford, getting word that it has been cleared by American regulators to restart a trial halted in the country for more than a month on concerns about a volunteer who became ill. AstraZeneca ADRs up today by just about 0.1%. Again, most stocks rose after the Trump administration resuscitated hopes for a spending package. Treasuries remained higher. The 10-year up 5/32. 10-year yield at the end of the week 0.83%. S&P up 11 today, higher by 0.3%. Turned out to be a losing week. On the week, the S&P fell by about 0.5%. The Dow down 28, a drop there of 0.1%. NASDAQ up 42, higher by 0.4%. Gold lower a little change, down $1 now, 19.03 the ounce, and crude West Texas Intermediate tumbled 2.2% today, 39.76 for a barrel of WTI. Well, as for the election and markets, Steve Cheverone is portfolio manager at Federated Global Investments.
I'm focused on January 22nd, because on January 22nd, I'm going to have a president. I don't know who, but I'll have one, which means the political uncertainty in front of me will be less than that's behind me. I think the virus will be incrementally less deadly with further development, treatment, and vaccine. I think I'm going to have a Fed that's still not thinking about raising rates. Stimulus that is either in place or on its way, and really positive earnings comps ahead of me in the second quarter.
Uber and Lyft both advanced today, but they do face the gravest threat yet to their business models after an appeals court yesterday ruled they must treat their drivers in California as employees instead of independent contractors. Uber shares advanced today by 0.1%. Rival Lyft, also based in San Francisco, up by 1.7%. Again, recapping equities mix, the Dow lower, S&P, NASDAQ higher, S&P up 11, a gain there of 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're making fun of me?
Am I that kind of a guy? Do our listeners sense that I have anything like that in my blood that would cause me to do that?
He doesn't have a bad bone in his body.
Yes, I was making fun of you.
And I loved it. It was spot on, spot on. All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Master along with Paul Sweeney. The David Rubenstein peer-to-peer preview. It is brought to you by Wells Fargo Commercial Banking, helping customers chart the way ahead in uncertain times. Well, he's a voice familiar to our listeners, Carlyle co-founder David Rubenstein, as is the guest in his latest episode of Peer-to-Peer Conversations on Bloomberg Radio and Bloomberg TV. David talked with John Mackey. He's co-founder and CEO of Whole Foods. They talked earlier this summer. They talked about the pandemic, and he also got Mackey's thoughts on retirement. Check it out.
When COVID came, many people were worried that retail stores would have to shut down, but actually food retail stores have benefited, you could argue, because people need to eat a lot more, I guess, or at least they're going down to buy staples. What was it like to manage under COVID at the outset?
So the main thing to understand is almost all food retailer sales are up, primarily because restaurant sales are down so much, right? People aren't eating out as much, so they're eating at home more. And that's been good for pretty much all food retailers. That's been good for Whole Foods as well. Maybe a little bit less good for us because we do a lot of prepared foods in our stores. And so that's way down. People are not going to our salad bars, our hot food bars. They're not going, and our offices are shut down around our stores. So we're not getting that traffic that we used to get in. But on the other hand, overall sales are up substantially because everything else is up so much.
Has it made the way you're going to manage in the future different?
Again, it helps us tremendously for being online sales, and that will continue. We won't go back to, once people get a taste of that, they like it. In Amazon, if you're a Prime member, delivery's free. So I think that's going to be a permanent shift for many people. You know, the hardest thing about managing the business now, there's an element of fear, right? People are scared of the virus. Everybody's masked up. We require masks for all of our team members and all customers. And those masks, I'm in Austin, it's 100 degrees outside right now, and wearing a mask around is not very fun or pleasant thing to do. And people have been shut down in their homes, and that's, we see what's happening. There's unrest around the country. So it's been this is, I don't know about you, but I'd have to say 2020 is the weirdest year of my entire life.
You've been the CEO of this company for 42 years. Very few people are CEOs of publicly traded companies or companies as large as yours for that long. Is it your expectation to do this another 5, 10, 15 years, or what else might you do? Would you go into government? Would you run for office? What else would you do?
I will not run for office, and I will not go into government. Think about it this way. Whole Foods is like, I don't have biological children. So Whole Foods is like, for me, it's the equivalent of it's my child. It's kind of grown up now, right? It's not a baby anymore, but parents love their children their whole lives, even when they're grown up. I will leave Whole Foods sometime in the next few years. I haven't announced the retirement date yet. And COVID, it's a crisis, so I'm dealing with the crisis here for that. And I always make this joke that it's like Whole Foods is my daughter, and I literally married my daughter off to the richest man in the world. And I just kind of came along to make sure the marriage settled in well. And I'm still here, but I know that the time will come eventually for me to leave. It's just not yet, and I'm not quite sure when it will be.
I like how he said that. John Mackey, of course, co-founder of Whole Foods Market, current CEO, sitting down with David Rubenstein. It's in the next edition, the current edition of Peer-to-Peer Conversations with David Rubenstein, which you can catch the entire interview tonight at 10 p.m. Wall Street time and throughout the weekend on Bloomberg Radio. I mean, John Mackey, man, what he did, I did a deep dive on Whole Foods on the TV side a few years ago, and it's just, they really changed the way we look at supermarkets in many ways.
They
right?
absolutely did.
Certainly a higher end, but
sure. Yep. And a lot of supermarkets followed suit across the board. I mean, you had to up your game, and you had to have another price point in your supermarket. You had to introduce, some different services. And it's fascinating that when Jeff Bezos said, "quote unquote," I'm going to experiment in the supermarket business, what does he acquire? He acquires Whole Foods.
Yeah.
And so he's, he knows quality when he sees it, and he thought the high end of the market would align with the Amazon Prime service and product. I'm not sure how this experiment is going for Amazon.
Yeah.
And I'm not sure what their appetite is for more assets in the supermarket business, because it is a tough market with razor-thin margins.
That's what I was going to say. The margins on that is just, very difficult business. All right, check that out on Peer-to-Peer Conversations with David Rubenstein. That's, again, at 10 p.m. tonight on Bloomberg Radio. All right, back to world and national news. For that, it's over to Denise Pellegrini. Hi, Denise.
Hey, Carol and Paul. We do have growing COVID-19 numbers in New York and across the country to tell you about hospitalizations in New York topping 1,000 for the first time since June, and nationwide, cases surging past 70,000 for the first time since July. And we spoke earlier here on Bloomberg Business Week with Dr. Ian Lustbader. He's clinical professor of medicine at NYU, and he tells us the numbers are worrisome, but he also says early research not published yet shows vaccines might be very effective.
Preliminary data shows that the vaccines really give you very high neutralizing antibody titers. This all has yet to be published, but it does seem very encouraging.
Meantime, the Washington Post reporting Johnson & Johnson plans to resume its virus trials soon. Joe Biden on the campaign trail, Wilmington, Delaware, pledging to make sure there's enough PPE for healthcare workers.
As president, I'll use the full power of the Defense Production Act to drive the manufacturing of personal protective equipment, masks, gloves, gowns, and more.
Meantime, President Trump taking, you might call it a pre-victory lap, promising a Republican sweep next month.
It's going to be a great red wave like you've never seen before. You're going to have a wave like you've never seen before. It's going to be all red, and it's going to be a thing of beauty.
And if you owe the IRS, you might be hearing from them soon, because tax officials are starting to send out those balance due notices to taxpayers again. That's after pausing in May because of the pandemic and a big mailing backlog. Global News, 24 hours a day, on air. I'm Denise Pellegrini. This is Bloomberg.
Thank you so much, Denise Pellegrini. Paul Sweeney, this is my gift to you for the fill. It's about Big Ten football. Take it away.
Yeah, it's interesting. I do have a son at Penn State, so I can attest to the, the fans' just desire to get back to football here. But, it's a very interesting. They were the first really big conference to say we're not playing. It's not safe. But then the pressure started building. And the pressure came from everywhere. It came from alumni. It came from students. It came from the football team itself. It just came from everywhere. Government officials. And this was not just at Penn State. It's all the Big Ten and Big 12 or Pac-12 schools. I have a son who goes to the University of Colorado in the Pac-12. So there's that issue there. So it's just too big of a business for so many of these schools that the economics were just brutal. One day they thought the economics weren't enough to outweigh the risk, and the next day they did. So here we go, and the timing, it's not great because we're seeing in the Midwest, like Madison, Wisconsin, places like that, like Columbus, Ohio, surges in cases. So it's going to be a very delicate balancing act.
I totally agree. And I think of some of the conversations we had earlier, including with the Whirlpool CEO, which I highly recommend everybody listen to because he was just really interesting. But this whole idea that we didn't have the playbook, but now we have a bit of a playbook in terms of if we start to see cases come up, and I think of talking with Dr. Lusbader earlier that, testing, tracing, as soon as you see a surge, you have to kind of lock it down. And I do wonder if the colleges and universities, especially those with, big sports teams and big football teams, whether or not they've learned something. And so if something starts to go astray, they can lock it down.
Yep. And we're, for some of these conferences like the SEC conference and the ACC, we're 4 or 5 weeks into it.
Yeah.
So there is some experience there. Yeah, have there been some outbreaks? Yes. But I think on balance, most people would say it's working out okay. And we, of course, we had the professional, but professional is different from college.
Totally.
You're not paying these kids, but these kids want to play. And, as long as you can do the most you can do for safety, maybe that's the balance.
Yeah. Well, fingers crossed it all goes safe. This is Bloomberg.
Sports, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pelota. Losing week for the U.S. stock market and up Friday with the Dow falling, S&P, NASDAQ both advancing. Most stocks rose after the Trump administration resuscitated hopes for a spending package. Treasuries remained higher right now, 10-year yield 0.83%. Gold, little change, down $1.65 today, down less than 0.1%. 1902 the ounce. West Texas Intermediate crude dropped 2.2%, 39.77 a barrel. The Dow down 28 points, a drop there of 0.1%. Worst level had been down 213, down 0.7%. S&P up 11 today, up 0.3. NASDAQ up 42, higher by 0.4%. Intel plunged today by 10.6%. Again, recapping mixed day on Wall Street, losing week. S&P up 11, up 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. There's a great media feature story in the magazine this week. It's about One American News Network. You've seen it. I know you have. It's also known as OAN. Depending on the outcome of the November election, it just might be President Trump's fallback plan. Let's get into the story. Felix Gillette, media editor at Bloomberg Business Week, wrote it. He's on the phone in New Jersey. And back with us, Bloomberg Business Week editor Joel Weber, also with us on the phone in New York. Joel, this is interesting.
It's very,
Right?
and this is one that Felix came to us with a while ago and just said, "Hey, by the way, OAN, anybody been watching them?" We were like, "What? No, not really." But there's been some very memorable moments this year because OAN has gone from basically a very obscure cable news network that was actually called Wealth TV not so long ago to becoming a news network that's actually in the White House briefing room. And it's privately held. Trump is a huge fan. The strategy has been to move almost to the right of Fox News. And there is a lot of speculation that maybe if the election didn't go President Trump's way, maybe there is a play here. Felix, can you tell us more about the history of OAN and its backstory?
Yeah, thanks, Joel. Great introduction to the whole OAN phenomenon. What's wild about OAN now is, like you said, I think it's going to be one of those companies that everyone in the media is going to watch very closely in the next couple of weeks. And if Trump doesn't win, and there's a huge scramble around, his media free agency, OAN is going to be one of the players to watch. And like you said, they started off. It's run by a family business, Herring Networks, and it's really one guy, Robert Herring Sr., who runs the whole thing, and he made a bunch of money in printed circuit boards in the 80s and 90s, and then in the 2000s he was kind of retired and wondering what to do with his life, and decided, you know what, I really like the TV show Lifestyles of the Rich and Famous. I'm going to start a TV network that's that entire thing, 24 hours a day, 7 days a week. We'll distribute it by satellite. It'll be amazing. People will love it. It'll be inspirational. And so he did this kind of from scratch, and it didn't have a huge amount of success because, in part, he had never done TV before, but he really insisted on doing everything himself. He would come up with the ideas for the shows. He would write scripts. He would review scripts. He would be in the editing room looking over things. He did that for probably 10 years without a huge amount of success and without building up too much brand recognition. Very hard to find Wealth TV anywhere in the United States. It doesn't have great distribution or carriage. And then in about 2013, he decided, you know what, let's try news out. So he started this news channel called One American News, which initially was just a lot of AP and Reuters, packages that anchors would kind of read and warm up, but it was all stuff that other people had produced. And then in 2015, along comes Trump, and he kind of was the perfect character for Herring Networks, in part because he was out of that Wealth TV world. He was almost like a perfect character for them. And they very early said, that's our guy, and started airing the entire, all of Trump's rallies without interruption in full every single time.
And it was a perfect marriage, basically, is what you're saying,
exactly.
Felix. And that perfect marriage, I'm wondering, how is it manifested itself in the network's numbers, right? It's closely held. We don't have that much visibility. What kind of success have they seen with this strategy?
I think they've had a lot of success in defining what their brand is. I think if you go out to Trump rallies now and you say OAN, people will know what it is. They still have their biggest challenge is trying to get broader distribution across the country. They're only in about 23, 24 million homes at this point, versus Fox News, which has at least 3 times that distribution. And they kind of have to convince cable and satellite companies that are already under a huge amount of pressure to get rid of channels that people aren't watching, that, you got to pick up OAN. And that's their biggest challenge. Can they get into more homes? And I think to do that, they really have to, if Trump wins, I think they'll have a good argument to those cable and satellite distributors. You need to you need to pick us up. If they don't, if Trump doesn't win, they have to have kind of an alternative argument for why people would want to watch this network.
So, Felix, has there been any indication that there's been any discussions between President Trump and his camp and OAN?
Trump tweets about OAN a lot, and, frequently holds it up as a better alternative than Fox News. Is he actually watching it himself? That's one big question. Would he actually consider going to work at a cable channel that has much less reach than other options that might be open to him?
Right.
That's kind of unclear. There was a report back in January that a group of investors in Texas with some connections to the Trump family were putting together a bid of $250 million to potentially buy Harry Networks. But nothing came of that, and the company has basically been pretty tight-lipped. They said, we've been getting interest, but at this point, we're not selling.
So I do wonder, too, Felix, the president obviously goes on Fox, excuse me. Has he ever gone on OAN?
He has.
Okay.
He did an interview in 2015 when he was still running, early in the primary. He did an interview with Sarah Palin, who was guest hosting for OAN. And he calls on them during press conferences quite frequently. But he hasn't spent a lot of time actually sitting down with them. And I think that's one of the things that people have seen and said, is he really serious about OAN? And frequently, Robert Herring Sr. On Twitter will kind of plead with Trump, please, we're giving you all this amazing coverage. Come over, come sit down with us. We'll interview you. We'll do a great job. Why are you sitting down with Chris Wallace at Fox News? You'll find a much better place at OAN. But he hasn't spent a lot of time on air there yet. So we'll see.
I think one of the answers to that, Carol, is 23 million homes. There's 100 million homes in the TV households in the U.S. and 23 million of them for OAN. That's probably the reason why he's not spending more time there.
Yeah, exactly. Oh, man, it's a great story.
Really cool.
And I have to say, I know some people have gone there, and I was like, what? What is it? And now I know, thanks to Felix Gillette. Felix, thank you so much. Media, entertainment, and telecom editor at Bloomberg Business Week. On the phone in New Jersey, our thanks to Jill Weber, editor of Bloomberg Business Week, on the phone in New York. Check it out. It's featured in the new issue of Bloomberg Business Week magazine, available on newsstands at Bloomberg.com and also on the Bloomberg terminal. A lot of great reads, including that cover story on Robinhood. All right, coming up, it's kind of usually my favorite part of the day, those last 60 minutes of our show. We get to do some deep dives with some interesting guests. That's coming up.